This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to explain why subrogation must be fair and why an insurer may never subrogate against its own insured. Zurich American Insurance Company et al. Sued their co-insurers, certain underwriters at Lloyd's, London, and defendant Arch Insurance Company, seeking a declaratory judgment that Lloyd's is barred under New York law from bringing a common law indemnification or contribution claim against a party insured by Zurich, Arch, and Lloyd's. The district court granted Zurich's motion for summary judgment, holding that New York's anti-subrogation rule precludes Lloyd's from bringing that claim. In Zurich American et al. Versus underwriters at Lloyd's, the United States Court of Appeal for the Second Circuit on December 12, 2023, resolved the dispute between the insurers. The dispute arose from a large construction project at LaGuardia Airport, pursuant to the contract Skanska and LGA, obtained a Contractors Controlled Insurance Program for the project, which included a tower, including $300 million of coverage broken into 3 layers. Zurich underwrote the first base layer of coverage, Arch provided a first layer of excess coverage, and then Lloyd's provided a second excess policy, that is, a third layer of coverage on top of Arch's. Each layer of coverage, including Lloyd's, contained a standard employer's liability exclusion. Zurich agreed that the general liability insurance policy provided coverage for the suit and arranged for Counsel to represent the Port Authority and LGA beginning in August of 2018. Roughly 3 years later, Lloyd's contacted Counsel and requested that LGA and Port Authority commence a third-party claim for common law indemnification or contribution against Skanska. Counsel analyzed the feasibility of such a claim but concluded that New York's anti-subrogation rule would bar it. After continued disputes between Lloyd's, Zurich, and Counsel for each, Zurich commenced this action seeking a declaratory judgment that the anti-subrogation rule would indeed bar the indemnification or contribution claim against Skanska. New York courts have established an anti-subrogation rule that is an exception to an insurer's usual right of subrogation against third parties. It provides that an insurer has no right of subrogation against its own insured for a claim arising from the very risk for which the insured was covered. The anti-subrogation rule is needed both to prevent the insurer from passing the incidence of loss to its own insured and to guard against the potential for conflict of interest that may affect the insurer's incentive to provide a vigorous defense for its insured. The anti-subrogation rule appropriately prevents an insurer from recouping losses from its insured even when the insured has expressly agreed to indemnify the party from whom the insurer's rights are derived and has procured separate insurance covering the same risk. The important public policies, however, served by the rule mean that the rule takes precedence over the parties' private contractual relationships and arrangements. Since Lloyd's insured Skanska under the general liability policy, that policy, through the insured contract provision, covers Skanska for the obligation it assumed in the contract to indemnify LGA and Port Authority for losses resulting from third-party claims for bodily injury, like the one underlying the present action. In conclusion, the Second Circuit concluded that Lloyd's cannot subrogate against Skanska, its own insured, for losses arising from the underlying suit that is exactly the risk for which Lloyd's insured Skanska. What Lloyd's proposed is precisely what the anti-subrogation rule prohibits. As a result, straightforward application of the rule bars the claim. In my opinion, subrogation is an equitable remedy where, when an insurer pays a debt owed by its insured, fairness requires the insured to provide the insurer with the insured's rights against third parties to recoup its payment on behalf of the insured. Regardless, it is unfair for an insurer to seek damages for one insured from another insured, because doing so violates the public policy of the state of New York and almost every other state, and is on its face unfair. Because Skanska paid a premium to be protected by Lloyd's and ends up getting sued by them? Just not fair. When two people in normal experience are in a simple auto accident but are insured by the same insurer, they will both be paid their claims regardless of who is at fault, since the insurer can't subrogate against its own insured. And usually the damages will be split 50-50 and everyone will go away happy. This video was adapted from my blog, Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. You can subscribe to the blog and you will receive notice of every blog posting, usually 5 or 6 a week, and access to the more than almost 4,700 blog postings. You can also subscribe to the videos at YouTube or at rumble.com. And if you do, I'd appreciate it if you would click on the like button at YouTube and the thumbs up button at rumble.com. And subscription to the videos is also absolutely free. If you're interested in more detail about insurance, insurance claims, insurance law, and insurance fraud, please consider for a very small fee subscribing to my Substack publications. Thank you for your attention.